Hey, good morning everyone. It's the live trader stream, Friday, February 16th. Getting on here a little bit later than usual. Got the video edition of the Trader's Espresso recorded. I think it's still processing, so when that's done processing and it's accessible, I'll let you know. But the video or the written edition is published, and the Michigan Consumer Sentiment Survey came out, and the results were better than expected. And I'm not sure that the stock markets really knew what to do about that, because they exhibited a little bit of hesitance around that number. I mean, when that number came out, it came out at 8 o'clock Eastern time. And if I go to a chart, hold on, it'll be easier if I just click. That's 8 o'clock when the survey came out. Okay. Last month's rather, was 95.7. Consensus was for 95.5. Came in at 99.9. I believe anything above 50 is considered positive sentiment. So you can see that that's a pretty big jump. I mean, if the expectation was 95.5, which is not that much lower, you know, it's about what it was in January. For it to shoot up to 99.9, you know, is that a good thing or is that a bad thing? Because until recently, like, the markets were fearing inflation and a more aggressive path to rate hikes on the part of the Fed. When the wage numbers came out 2 weeks ago on like the 26th, you know, that threw the markets for a loop. And then, of course, and you're probably tired of hearing this, but Wednesday's CPI number was what all eyes were focused on, the CPI number. And the CPI number came out, and it was about an hour before the market opened. It's at 9:30. It came out at 8:30, and it came out hotter than expected, and the futures were down. And then the market opens, and by about 10 o'clock Eastern, so about half an hour in, everything just ripped higher, and the Dow, for example, closed up 253. So right now we're looking at a Dow that's up 44, 49. You know, that's up 0.2%. The NDX is up 0.21%. The composite's up 0.17. The S&P is up 0.12, and the Russell's leading at up 0.35. Now, I think that the Russell is, if you want to play to the long side, I think the Russell is the best way to do it. I think that it is lagging the other indices in its move up, and I think it will follow through. So I think if you want to get in on an index at still a reasonable value, I think the Russell is the place to look. As far as the VIX is concerned, the VIX is at 18.5, so it broke below 20 yesterday. The VIX futures are at 17.5. Okay, the Dow, NASDAQ, and S&P futures are all basically flat, up anywhere between 0.01 and 0.04. The Russell futures are up 0.17 right now. So as far as like a futures play today, the Russell's where I'm going to be looking. As far as options plays today, the Russell, I'll be looking at some Russell options as well. So just let me put the mic on mute for 1 second, and I'll get right back to you, folks. So I'm going to be looking at some options on the IWM or the IJR. Those are two symbols that track small caps. I'm also looking at oil, and I'm looking at the yen for longer term options plays. Now the yen is the only troubling one because it's kind of overbought right now. It's been slowing down. Today it demonstrated some signs of slowing after having been really strong for like the last 2 or 3 days. So I might wait and see on that one, but I'll be keeping my eye on it. I think oil still has more room to run. If we take a look at what crude's doing right now, crude is down a little bit. It was up above 61. The 10-year Treasury, the yield on the 10-year Treasury is normalizing. It's at 2.87. The dollar is up 35 basis points after having been down earlier overnight. Gold is up a little bit. So that's kind of where we sit right now. It's just, keep an eye on things and kind of figure out if this market's going to broadcast a direction in which it's going to go. So now's a good time to get another cup of coffee. So I encourage you all to do that, and we'll be right back. All right, let's switch our view to what the Russell futures are doing. Yeah, I'm going to take a wait and see on the Russell right now. Unless I want to scalp it, I could. I think it's a good play up to about here. And that little pullback would have been a good place to get in if my broker didn't get in the way. Now if it trades through, which is, oh man, that was, this dashed purple line is a good target because we're seeing that level having been hit as a closing price several times. So it's been an area of resistance. So this is now petering out. It's looking like, at least for now, this is really more of a short play. Of course, I'm going to want some confirmation of that. See, now it's firming up. But I really want to let this weakness play itself out before I take a long position. I don't know if I necessarily want to play it down. I think I'll take a nibble. The real question is, does it have enough momentum to break through these moving averages? Because if it does, I would look at it to come down to about this level right here, somewhere around there. Which, in order to play it that way, I mean, I could add another contract and let it hit this profit target, and so I'm basically playing with the house's money at that point. The Russell's still leading, in both the cash markets and the futures markets, but the other indices are catching up now. I've got a sneaking suspicion, because this 4-minute bar is just about to close. I can see it blowing through my stop and then resuming its move downward, like just to shake me out and spite me. Which it did anyway. I mean, so now I added a second contract in anticipation of just a continued move higher. You know, it pushed above this level, like briefly. If it trades up this level, which is where I think it's headed, then it takes one contract off the table. You know, I book those profits and I just write it up to this next level here. So this, which is a pivot, 1550.3. The only concern being this move up is so hesitant and so cautious. It's, you know, it's not a real high conviction move. And my attitude right now is, this is my capital that you're messing around with. So if you're not going to make a move up, like declare what you're going to do. If you're not going to make a move up, then give it back and I'll give it to somebody else. Sometimes patience is key, but you also have to know when to not be too patient. I'm lending money to you, and if you're not going to do something constructive with it, then give it back. Okay, I'm done having my time wasted. Okay, well, you should have just declared that in the first place then. If you can't make a decision, don't play the game. So we're done playing the Russell today because it's clearly just going to pussyfoot around. And this might just be equity indices in general because, I think it's Friday. It's been a big run up for the week. We just got some data that apparently the market had no problem making a decision Wednesday morning when the CPI numbers came out. But now it's parsing consumer sentiment data like it's not clear what picture is being painted. The picture that's being painted is this is an economy that's growing. There's really nothing to interpret. So I think the hesitance is over, has this run up gone too far too fast? Yeah, the Dow is much better positioned from a shorter term standpoint. The NASDAQ not as much. The S&P is shaping up for an interesting, I think, short play here. Um, on the risk spectrum, I think the Russell and the NASDAQ futures are at the high end of the risk spectrum. Your S&P is kind of your middle of the road, and your Dow is like the lower. Because there's a big difference in the charts right now. There's a force right now pulling all the indices down. I don't know why I gave you a second chance. I guess I'm just a glutton for punishment. All right, we'll make something happen already. You know, enough pretending. Okay. I've officially lost patience. The Russell's a deadbeat today. I'm going to send Vito and Luigi out with a couple of lead pipes to get my money back. That's why you don't lend money to a crackhead. Alright, I'm done ranting. So, what is needed is to figure out which of these futures is going to actually do something productive. Let's see, right now this is kind of where we're stuck. And the question right now, honestly, on the Dow is not is it going to break above this trend, which it did, but is it going to stay above that trend, which we'll know in about 10 seconds. Because it's a 4-minute bar. It's 9:12 right now, so it just confirmed. The problem is the stochastics don't leave me feeling warm and fuzzy right now. Like, just because it closed above that, like it's shaping up to be a retreat back down to that level, possibly. Although the current price action is not telling us that. But the thing is, this is such a parabolic move higher that you wait for something like that to run out of gas to figure out what it's going to do. Or if it pauses, does it pause and go higher, or does it pause and then pause? It's like your friend when you're going hiking and asks you to pause because he needs a rest, and every time and he's asking you more and more frequently, and the rest stops are becoming longer and longer. It's like, dude, this is going to take all day. Like, what kind of a hike are we on right now? Like, if I had known this, I would have left you in the car. So the S&P has already made its break. So this needs to happen. So I think that's a level of retracement before this move, before I move up again. Just kind of slide down to here. Which, if that's the case, I don't know, I would be long or short of it at this point. Kind of like what I'm seeing on the Euro chart right now. have a level of resistance here. We've got primary, secondary level of support. This is a play on a bounce off of the secondary level of support or a breakdown to here and then a play up. Now, if we do a Fibonacci, right now it's struggling at this 23.6 level. Which is kind of here on this chart, right? If it can break through successfully, then I'm expecting it to trade up to this 38.2% retracement, which is close to this one here. So this is one of those nice examples where the Fibonacci fits very nicely because we can see that 73.6 is a level of support, and that's kind of a minor level of support. I mean, you don't usually see it supported there. I mean, sometimes you do, but the major levels of support are the 61.8 and the 38.2 on the other side, which is the obverse of it. And so right now, see, we're waiting to see what happens here. Does it bust through and then trade all the way down here? Because right now what the stochastics are telling us is potentially a breakthrough. Zip and zip down. And it might happen here. So let's take our foot off first base and see. This bar closes in about 5 seconds. So that's technically not really anything. I mean, it closed on the line. You miss 100% of the shots you don't take. Now what concerns me here is if this was going to be a break to the downside, it would have happened already. It doesn't always happen this way, but when you see that new bar form, I mean, it formed below that trend line. That's usually when you just see a break to the downside. Now, usually, not always, just usually, it's starting to make that move down, which is good. There's a very high probability it's going to retrace again. Which I don't want to give it the chance to do that against me. So I'm basically got my stop placed 1 tick above my entry point. So if it stops me out, I do it at a loss of 1 tick right now. This is almost like using a trailing stop without having put a trailing stop in. I mean, that's basically what I'm doing, is trailing it down. But I want to give this the chance to complete its move down. Got to buy some new shoes. I can't do it with this. See, that's more like it. Okay. See where I place my stop at about the halfway point down, which I might have wanted to give it like one more tick. It would have stopped me out anyway. It's just, if this is a real move, retraces to the halfway point are expected. Anything above that is a sign of weakness. And this could play out either way. I mean, this could continue its move downward, or it could decide, you know what, I don't really want to go down there. I actually feel safer in the comfort of my mother's womb up here. And the stochastics are now telling a different story, which is this is now a rebound. Yeah, it's going to drift down here a little bit because we still have the slow stochastic making its move. But once it does, you know, down to about here where my cursor is right now, it's going to be a bounce play. And I'm really not interested in playing moves that are just a few ticks. Like, that's a great way to lose money because, you know, you have to act fast. If you don't, you're gonna get out of the loss. The other aspect to it also is that it just drives your transaction costs up. And I've complained yesterday about not trading efficiently. That's my big, like, I don't believe in New Year's resolutions, but if I have one for 2018, it's to trade more efficiently. So on that note, on the note of New Year's resolutions, I'm going to go ahead and end the stream because it's 11:30 East Coast time. Traders are going out to lunch. I'm going to do the same. I'm not going out to lunch, but I'm going to grab lunch. And we'll reconvene with you here in 2 hours at 1:30 Eastern time. All right? Enjoy your lunch, everyone. And we'll see you soon.